Two people walk into the same bank on the same Tuesday morning. Same branch, same front door, same fluorescent lights humming over the same beige carpet. One of them walks out 20 minutes later, quietly furious, $35 poorer, having spent half an hour being told why the thing they needed wasn't possible today. The other one walks out with a handshake, a business card, a follow-up call already scheduled, and the warm feeling that somebody in a suit actually wants to help them win. Same bank, same morning. Two completely different planets. And here's the part that should bother you. The difference between those two people was not character, it wasn't intelligence, it wasn't even really how hard they worked. It was a number on a screen that neither of them could see, and that number quietly decided how every single human being in that building was going to treat them before they even said a word. And when you're not. When you get nickel and dimed and put on hold and handed a brochure instead of a solution, you take it personally. You think, wow, they really don't value me. But here's the truth that took me an embarrassingly long time to understand. And it changed the way I look at money forever. The treatment you get from a bank has almost nothing to do with respect and almost nothing to do with you as a person. It's not personal at all. It's a signal, it's the bank quietly telling you, out loud, with every fee and every smile and every, let me check with my manager, exactly which side of their business you're standing on. Because a bank makes money two completely different ways, and which way it's making money off of you decides everything about how you're treated. And once you can read that signal, you can never unsee it. I'm not a banker, I'm not rich, I didn't inherit anything, I'm just a regular middle-class guy who got obsessed with figuring out how money actually works underneath the surface, because for a long time I felt like everybody else got a rulebook I never received. And the bank thing? This was one of the biggest pieces of that rulebook. So if any part of this video helps you see money a little differently, do me a favor and hit subscribe, give it a thumbs up, it genuinely helps the channel more than you know. That's the only ask I've got. Now let's get into it. Because I want to walk you through every single level, from broke to millionaire, and show you exactly how the treatment changes at each step. But stick with me, because the most important part of this whole thing isn't the millionaire level. It's a line you cross way earlier than that, and most people walk right past it without ever noticing. Or do you feel a tiny bit of dread, like you're about to find out about a fee you didn't expect, or get told no about something? Because that feeling, that little flinch, is data. That flinch is your account telling you which floor of the building you're on. And I want you to hold on to that feeling, because by the end of this, we're going to figure out exactly how to change it. A bank is not your friend, and it's not your enemy. A bank is a machine that has been precisely engineered to do one thing: extract the most possible value from every customer, in whatever way that customer makes itself available to be extracted from. For some customers, the most profitable thing the bank can do is charge them fees, overdraft fees, maintenance fees, ATM fees, minimum balance fees, late fees, the whole buffet. For other customers, charging fees would be insane, because those customers are sitting on so much money that the bank desperately wants to hold that money, lend it out, manage it, and earn off of it for years. You do not charge a $35 overdraft fee to someone you're trying to convince to move $2 million over to you. You'd lose the whole relationship over $35. So the bank doesn't. It treats that person like royalty. Same institution, two entirely different strategies. And the only thing that determines which strategy you get is whether you're more valuable to them as a source of fees or as a source of deposits. But the floor you're on dictates everything. On the bottom floor, the air is thin and the rules are harsh. Every move costs you. The doors are heavy, the people are pleasant but powerless, and the word no hangs in the air constantly. Climb a few floors and the air gets easier to breathe. Some of the fees vanish. People start saying yes more. Climb higher and suddenly there are couches, there's coffee, there's a person whose entire job is to make sure you're happy. And on the top floor? On the top floor, they don't even meet you in the building. They come to you. That's the elevator nobody shows you. And the whole game, the entire thing, is figuring out how to make that invisible elevator go up. So let me take you floor by floor, because the way the treatment changes is genuinely wild once you see it laid out. And the part where it gets really interesting is coming up fast. When you have very little money, the bank treats you as a source of fees, full stop. And the cruel genius of it is that the less money you have, the more the system is designed to take from you. Think about it. Who pays overdraft fees? Not the person with $10,000 sitting in checking. They never overdraft. The person who overdrafts is the person living right at the edge, the person whose paycheck and whose rent are in a photo finish every single month. The bank knows this. So the bank offers you the convenience of letting your card go through even when you don't have the money, and then charges you $35 for the privilege. You spent $4 on a coffee you couldn't quite afford, and the bank turned it into a $39 coffee. And if a couple of those hit before your paycheck lands, you can lose well over $100 in a week to nothing, to air, to being poor. The same things, banking, borrowing, insurance, even groceries, cost more for people who have less, precisely because they have less. And when it comes to banks specifically, the data is brutal. Studies of overdraft fees have found that the overwhelming majority of them, the lion's share of all the overdraft revenue a bank collects, comes from a small group of customers who overdraft over and over again. In other words, the bank is not making its fee money off of everybody equally. It's making it off of the people who can least afford to lose it, on repeat. The bottom floor isn't just uncomfortable, it's expensive in a way the higher floors literally never have to think about. But here's the part most people completely miss, so stay with me. And survival mode is not just an emotion, it's a financial position, and the bank can smell it. In survival mode, every decision you make is about right now. Can I cover rent right now? Can I get gas right now? There's no room to think about next month, let alone next year, because next month is a luxury you can't afford to plan for when this week is on fire. And the tragedy is that survival mode is the single most expensive way a human being can interact with money. It forces you into the high-fee products, the payday-style borrowing, the I'll just pay the late fee decisions, because you have no buffer, and a buffer is the only thing that lets you say no to a bad deal. The bank isn't punishing you for being poor out of cruelty. It's just that survival mode makes you the perfect customer for its most profitable products. Your desperation is, to them, a revenue stream. I know that's harsh, but you cannot fix a thing you refuse to look at clearly. Quietly, a few things. The overdraft fees mostly stop, because you stopped overdrafting. The bank notices you keep a minimum balance, so it waives the monthly maintenance fee it would have charged you. You're still not getting any real attention, nobody's calling you by name, but you've stopped bleeding. You've become, in the bank's eyes, roughly break-even. Not very profitable, not a problem. You're furniture. And honestly, becoming furniture is a massive upgrade from being prey. A lot of people spend their whole lives just trying to climb from the prey floor to the furniture floor and never realize that's the climb they're even on. But we're not stopping at furniture because here's where it starts to get really good. Now you're solidly middle class, you've got a real emergency fund, maybe 20-30,000 sitting in savings, a decent income, a retirement account, maybe a house. Now something shifts that you can actually feel. The bank starts being nice to you. Not just polite, nice. You get a card upgrade offer. You get invited to talk to a financial advisor for free. The fees aren't just waived, they're never even mentioned because the bank would never risk annoying you over a small fee when you're carrying real money. You call customer service and the wait is shorter, the rep is friendlier, the answers are more flexible. Why? Because you have crossed a line. You are no longer primarily a source of fees. You have become a source of deposits, and deposits are the raw material a bank runs on. Your $30,000 sitting in savings is money the bank gets to lend out to other people at much higher rates than the tiny interest it pays you. You are now feeding the machine instead of being chewed up by it. And the machine has decided it likes you. The most important transition in your entire financial life is not going from rich to richer. It's going from being a source of fees to being a source of deposits. It's crossing from the floor where the bank profits by taking from you to the floor where the bank profits by keeping you. Because everything good flows from that one crossing. And the beautiful, almost unfair thing about it is that this crossing happens way earlier than people think. You don't need to be wealthy to cross it. You need a buffer. You need enough of a cushion that you stop triggering fees and start holding a balance the bank wants to hang on to. That's it. That's the door. And most people never walk through it, not because they couldn't, but because nobody ever told them the door was there. You've got, let's say, a couple $100,000 in investable assets. Now you get a dedicated person, a name, a face, a direct line. The bank assigns you a relationship manager whose actual job is to keep you happy so you don't take your money somewhere else. The rates you get on loans quietly improve. You qualify for products other people don't even know exist. You get the velvet rope treatment, the let me handle that for you personally energy. And go up one more floor, to genuine wealth, to private banking, to the millionaire and multimillionaire level, and the whole relationship inverts completely. The bank no longer waits for you to come in. They come to you. Fees? There are no fees. They'll pay you to bank with them. You get rates ordinary customers will never see. You get a private banker who knows your kids' names. You get invited to events. The mortgage that takes a regular person 3 weeks of paperwork and a polite rejection gets approved for you in an afternoon because the banker wants the relationship. At the top floor, you have become so valuable as a holder and mover of money that the bank competes for you. It courts you. It treats you like the prize because to them, you are. At the bottom, you pay the bank. At the top, the bank pays you. That's it. That's the entire arc. From the prey floor to the penthouse, the poor pay the bank in fees, the wealthy get paid by the bank in interest, in perks, in access, in waived everything. And the exact midpoint, the fulcrum the whole thing pivots on, is that line we talked about, the moment you stop being a source of fees and become a source of deposits. So here's the question that should be lighting up in your head right now. How do you actually cross that line on purpose? Because once you know that the line exists, the question stops being, why does the bank treat me this way? And starts being, what do I need to do to change which floor I'm on? And the answer is simpler than the whole banking industry would ever want you to believe. The way to change how the bank treats you is not to trick the bank. It's not some life hack, it's not a secret phone number, it's not asking to speak to a manager in the right tone of voice. None of that moves the needle because the bank isn't reacting to your attitude, it's reacting to your number. The way to change how you're treated is to change the number. And changing the number is not some elite members-only secret. It's basic, almost boring, financial behavior done consistently. It's building a buffer so you stop triggering fees. It's keeping a balance so you become a deposit worth holding. It's spending less than you make so that money accumulates instead of evaporating. There is no secret club. There's just the quiet, unglamorous work of becoming the kind of person the bank wants to keep instead of the kind it wants to bill. And that distinction, that's not a trick, that's an identity. A person who keeps money behaves completely differently from a person who spends it all. In 1,000 small ways that compound. They build the buffer, so they never pay the overdraft fee, so they keep more. So the buffer grows, so the bank starts treating them better, so they get better rates, so they keep even more. The whole thing is a snowball, and the snowball is rolling either toward you or away from you right now, today, based on who you've decided to be. You're not trying to get rich to impress the bank. You're trying to become the kind of person for whom money accumulates by default. The treatment is just the scoreboard. It tells you which direction your snowball is rolling. And I want to slow down on the survival mode thing for a second, because I don't think people give it enough respect as a force. We talk about it like it's just stress, just a bad mood you're in when money's tight. But survival mode is a measurable tax on your actual thinking. There's real research on this, on what scarcity does to the human mind, and the findings are honestly haunting. Studies have shown that the mental load of being financially squeezed, of constantly juggling which bill to pay and which to push, eats up so much cognitive bandwidth that it measurably lowers your ability to make good decisions in every other area of your life. The worry itself is taxing your brain. In some of this research, people under serious money stress performed on problem-solving tasks as if they'd lost a significant chunk of their reasoning ability, not because they were less capable, but because their mind was already running at full capacity just trying to keep the lights on. Think about what that means. Being broke doesn't just empty your wallet. It quietly borrows against your judgment, which makes it harder to make the very decisions that would get you out. That's the trap. That's why just make better choices is such useless advice to give someone in survival mode. Their bandwidth is already spent. And the bank, sitting on the other side of that glass, is dealing with a customer whose defenses are down, whose attention is fractured, and who will reach for the fast, expensive option because the slow, cheap one requires a clarity that scarcity has already taxed away. The buffer, the margin, the cushion, whatever you want to call it, isn't just money in an account. It's the thing that gives you your brain back. It's what lets you think clearly enough to climb. But the person who's crossed the line, who's got a buffer and a growing balance, starts to see the exact same world completely differently. They see opportunities where the other person sees only threats. A market dip isn't terror, it's a chance to buy. A surprise expense isn't a catastrophe, it's an annoyance the buffer absorbs. A loan isn't a desperate lifeline, it's a tool they can choose to use or not. Same world, same economy, same bank even. But one person is bracing for the next hit, and the other is calmly looking for the next move. And the difference between those two mindsets isn't personality. It's whether or not you have a buffer between you and the edge. That's the whole thing. A buffer doesn't just protect your money, it changes how you see reality. The floor you're on quietly shapes parts of your life you'd never connect to a checking account. Take your job. The person on the bottom floor, with no buffer, is trapped in whatever job they currently have, no matter how badly it treats them, because they're one missed paycheck from disaster. They can't quit, can't push back, can't negotiate, can't take the lower-paying job that would actually lead somewhere, because survival mode demands the money today. Their boss, whether the boss knows it or not, holds all the power, and that powerlessness comes straight from the empty buffer. Now look at the person who crossed the line. They've got a few months of expenses sitting behind them, and suddenly they can negotiate, because they can afford to walk. They can take the calculated risk, the better opportunity, the leap, because if it doesn't work out, the buffer catches them. Same career, same skills, completely different leverage, and the only thing separating the two is margin. The buffer doesn't just change how the bank treats you. It changes how your employer treats you, because it changes whether you can say no. Two people bracing against the edge together, snapping at each other over every unexpected cost, is a different relationship than two people with a little margin who can absorb a bad month without it turning into a fight. I'm not saying money buys a happy home. It doesn't, and plenty of people with margin are miserable. But removing the constant low hum of financial panic removes a specific kind of pressure that breaks people apart. The buffer buys quiet. It buys the absence of a certain dread that follows survival mode people from the bank into the kitchen, into the bedroom, and into their sleep. And here's the through line on all of it. The freedom that comes from crossing that line, the leverage at work, the calm at home, the steadiness in your own head, it all flows from the same source. And it's the same source the bank is reading when it decides how to treat you. Margin. Everything good is downstream of margin. They'll agonize over a $4 coffee while paying for subscriptions they forgot they had, carrying credit card balances at 20-something%, and living in more house than they need. The bank, by the way, loves this. The bank is thrilled when you fight hard over the small stuff, because it keeps you distracted from the big stuff, and the big stuff is where the bank actually makes its real money off of you. The interest on your debt, the spread on your mortgage, the opportunity cost of money you never invested. That's the heavy machinery of your financial life, and most people leave it running unattended while they police the petty cash. If you want to change which floor you're on, you have to flip that. Stop sweating the $4 coffee. Start scrutinizing the $4,000 decisions. That's where the elevator actually moves. But there's a trap in here too, and I have to warn you about it before we go further. They lease the luxury car to look like a top floor person, they buy the watch, they finance the lifestyle, and in doing so they actually shove themselves right back down to the bottom floor, because now they're drowning in fees and interest and payments, exactly like the person who never had any money at all. This is the great irony I see constantly. The person making $90,000 a year and spending $95,000 gets treated worse by the bank than the person making $60,000 and spending $45,000, because the bank doesn't care what you earn, it cares what you keep. Income is what you make, wealth is what's left over, and the bank's treatment tracks wealth, not income, every single time. So if your strategy is to look rich, you've already lost, because looking rich and being rich are not just different, they're opposites. Every dollar you spend looking rich is a dollar that can't become the buffer that actually changes your life. Picture two guys, both 30 years old, both making the exact same salary, $65,000 a year. Same job, same city, same starting point, down to the dollar. Guy number one gets his raise and immediately upgrades his life to match. New car, financed, nicer apartment, more rent. He's not reckless, he's not stupid, he just spends right up to the edge of what he earns, because that's what everyone around him does, and it feels normal. His checking account hovers near zero by the end of every month. He overdrafts a couple times a year. The bank to him is a place that charges him fees and turns him down for things. He's furniture at best, prey at worst. Guy number two gets the same raise and does something almost invisible. He keeps living like he did before the raise and lets the difference pile up. Boring, unsexy, nobody notices. But within 2 years he's got a real cushion, and the bank has quietly started treating him differently. Lower rates, friendlier service, offers the first guy never sees. 5 years in, guy two has a down payment, an emergency fund, and an investment account that started to grow on its own. Same salary, same 5 years. One of them is climbing the elevator without even trying hard, and the other is stuck in the lobby wondering why the doors won't open for him. The only difference between them was a single decision, repeated quietly, for years. Keep the gap or spend the gap. That's it. That was the whole fork in the road. It can sound like I'm telling you that the path to being treated well by your bank is a life of grim self-denial, of never enjoying anything, of pinching every penny until it screams. So let me tell you the part that actually made me fall in love with this whole idea, the part that reframed it completely for me. It's not about deprivation, it's about clarity and the peace that comes with it. The goal was never the private banking lounge. The champagne and the velvet rope are nice, sure, but they were never the point. The point is the feeling of opening your banking app and not flinching. The point is the unexpected bill arriving and you barely reacting because the buffer just absorbs it. The point is being able to say no to a bad deal, walk away from a bad job, or take a real risk because you've got something behind you. That's what the buffer actually buys, not status, freedom. The wealthy don't get treated well by banks because being treated well feels good, though it does. They get treated well because they've built a life with margin in it. And that margin is the most valuable thing a person can own. It's the difference between living braced for the next hit and living open to the next opportunity. There's a number that means enough, and it's so much closer than you think. You do not have to become a millionaire for this to change. You don't have to reach the penthouse. You just have to cross that one line, from fees to deposits, from survival to a little bit of margin, and from that floor up, everything gets easier. The fees stop, the respect starts, the snowball begins rolling your way instead of against you. And reaching that floor is not about luck or a giant salary or a rich uncle. It's about becoming a person who keeps a little of what comes in consistently on purpose, starting with whatever you've got right now. Enough is not a fantasy. Enough is a buffer between you and the edge, and that is a genuinely achievable number for far more people than believe it. The treatment you get from a bank is not respect, and it's not personal. It's a signal telling you which side of their business you're on. At the bottom, you pay the bank in fees, and survival mode makes you the perfect target for its most expensive products. As you climb, you cross the one line that matters, from being a source of fees to being a source of deposits, and from that moment on, the whole relationship flips, until at the very top, the bank stops charging you and starts paying you, stops waiting for you and starts coming to you. And the way you climb that invisible elevator is not a trick, it's an identity, the quiet identity of a person who keeps a little of what they earn and lets it compound into margin, into a buffer, into freedom. The bank's treatment is just the scoreboard showing which way your snowball is rolling. So look at how your bank treats you. Really look and ask yourself honestly what floor that puts you on. And then ask the question that actually matters. The guy who kept the gap? Who built the buffer? Who quietly crossed the line and changed his whole life $2 boring at a time? That person who the bank started chasing instead of charging? Could that person be you? Because nothing about him was special. The only thing he had that the other guy didn't was a decision, made over and over, starting today. So that's what I want from you today, and it's small. Don't try to overhaul your whole life tonight. Just find one place this week where you can keep the gap instead of spending it, and let it start. One decision. That's how the elevator starts moving. And do me a favor, drop a comment and tell me, which floor do you recognize yourself on right now, and which one are you climbing toward? I read them, and I think it helps other people to see they're not the only one figuring this out. If this helped you see your bank and your money a little differently, hit that like button, subscribe so you catch the next one, and I'll keep making these for you. I'm Jake. I'll see you in the next one.